All right, y'all. I wanted to introduce you to TradingView. If you're unfamiliar with TradingView is the platform we use to watch the stocks where we want to trade, right? To watch the stocks we want to trade. So, and I believe it's the most straightforward, to the point, easiest charting on the market right now, right? So anyway, the first things first. Everyone in the Get Every Dollar program should have a trading view, right? Let's start there, right? So what we're gonna do is we're gonna go to tradingview.com, right? A screen will pop up. It's not this one. It's like the screen before you have a membership. The membership is free. You're gonna put your email and such and such. You're gonna do all that, right? Once you do that, once you're logged in and you have a membership, you're gonna go over the products. You're gonna go hit super charts, right? This is our bread and butter, super charts. Go ahead, get there. There we go. Super charts is our bread and butter. Let me hide everything as to not confuse my people. All right. So boom. This is what the chart is gonna look butt naked like this, right? It's gonna be bare bones, nothing going on, just the price action, right? You may have a volume profile at the bottom. I'm not sure. I haven't seen that in a while, but this is what your chart is gonna look like, right? You're gonna have your time frames up here: 1 minute, 3 minute, 5 minute, 15 minutes, 30 minutes, so on and so forth, right? This stands for day. This stands for week. This stands for month, right? These are the TFs. So when you read the chat language, these are the TFs, right? You're gonna want to scroll through these and look at different price action on different time frames, right? You can also come here and customize, right? You may favorite the 15, 20, 45 minute, put that up there. I like to keep it at the 1, the 5, 15, 30, hour, 2 hour, 4 hour, 24 hour. You know what I'm saying? Um, yeah, in a day and week and month, right? These are the ones we like to keep. So, star those, hit the star next to those, keep those up there, right? You got your time frames. You got your panel, your drawing panel over here. When we draw zones, we like to use the rectangle. So you could draw a rectangle, right? And you could right click on a rectangle. You could go to settings, and I have it extended, right? So when you draw a rectangle, you can either extend it yourself, or what I like to do, because we're going to use a lot of this in our trading program, right? Um, I like to have it um, extended to the right, so it automatically does that, right? So wherever I draw one, it automatically extends to the right, right? Boom. So we're gonna be using a lot of that, right? We're gonna use a lot of this rectangle tool, right? Um, in this lesson, I'm gonna teach right now. We're gonna be using our Fibonacci retracement, right? You could star that because we're really only gonna be using that out of this whole panel. We're only using fib retracement, right? I personally like my fib levels. Um, they were default, but I like my fib levels a certain way. I'll go through that right now. So I like the 0, the point 0.5, which is 50%, the 6.18, I mean the 0.618, which is a little bit after the 50%, and the 1. I like the 1. And then these are just extended, right? So basically when we draw our Fibonacci from high to low or low to high, these would be the extra targets, right? And I just have those there. So let me delete this, right? So again, we'll be using, it's going to start like that. It's going to start off the brush. We're going to use that. We're going to use fib retracement, right? Our bread and butters. Right? Over here is our watch list. Your watch list is going to be butt naked, right? It's not going to have anything on there. You're going to go to the plus sign, add symbol, stocks, funds, futures, whatever, forex, crypto. Right now we're doing a lot of stocks and crypto. So What you're gonna do is type in your symbol. For example, I was looking at Oxy today. Oxy company, their symbol is Oxy. I'm gonna click on it and it's gonna pop up automatically in my watch list, right? It's in here somewhere, but I guess I did it in alphabetical order. Here it goes, right? Actually, I don't know where it's at. Whatever. But yeah, it's gonna pop up in your watch list, and it'll be there, so that way you can scroll through, you know, the assets that you're interested in, right? So let's get back to Apple, right? Apple, we were watching earlier. If you go back into the chat, if you'll see that we were talking about Apple going outside of yesterday, meaning that it started off outside and it retraced more than 50%, which I'll show you in a second. It retraced more than 50% yesterday, and it was going to go outside of yesterday, right? Meaning it was going to close. It opened outside and it closed outside of yesterday's candle, right? So let me go on the 24-hour candle because that's what we were looking at, right? Time frame, candle, right? We're on a 24-hour time frame, so that means each candlestick represents 24 hours of price action, right? So, for example, right, we didn't have this yesterday. We had this yesterday because this is yesterday's candle. This big green candlestick is yesterday's price action. All the price that happened within the 24 hours of yesterday, of Wednesday, this is it. This is all the action right here. This green, right? Also, if you don't understand how to read the charts properly, I have the beginner's course on the YouTube. I'll send the links in the chat so that you could get an understanding of what's really happening when you're watching these candlesticks. It's a very easy language to understand. I broke it down very simple for you. So go watch those videos, watch them over and over again. So again, this is Wednesday's candlestick, right? We didn't have any data for today until it started. For the 24-hour session, it's until it started, right? So if I break this down to a smaller time frame, which let's see, let me break it down to a 30-minute time frame, right? Again, we're not supposed to have this because I definitely hit the replay mode. Yes, let's exit. All right, let me break it down again. So again, this is today. This is yesterday. We're looking at this. We're looking at yesterday, right? Let me break this down. Let me bar replay. Let's cut out the whole today. We only have yesterday's action. This is Wednesday's action right here, right? We had a low. This is the low because this yellow is pre-market. The blue is after hours, extended hours. So this is still Tuesday. This is where Wednesday starts. This is where Wednesday ends, right? So this is Wednesday. We had a low in pre-market of 233.52. And we had a high of 238.49, right? Cool. So if we go on a bigger time, if we go on a 24-hour time frame, all of this is one candle, right? This is all one 24-hour candle. All of this from here to here. This is 24 candles, right? And that's that green candlestick that I showed you on the 24-hour chart, right? So before we had today, because today would start with the next yellow, right? Pre-market, it would start. Before we had anything, we had this. So what we would do is we would go to our Fibonacci retracement, right? And this is the strategy. This is an easy get money strategy that I've used many a time and done my thing with, right? We want to take our Fibonacci retracement and we want to mark it from, and actually, let me fix this right now. We don't need that. All right. All we need is these four, right? We want to take the Fibonacci tool. Let me delete it. We want to take our fib. We want to take it from the top of yesterday. And if you want to get real precise, you can take this magnet tool. You can open it up and you could add strong magnet. and it'll snap right to the joint, right? So boom, we want to take it from the top to the bottom, right? Now we have our levels of price where we can look for reactions to yesterday's action, right? We have that marked up. This is the 24-hour candlestick, right? When we break it down into 30-minute increments, we will see that. Now let's replay it. Let's replay it now. I think this is how you do it. Let's see. All right. Let me speed that up. All right. So let me pause that. Right. Boom. It got too crazy for me. Excuse me. All right. So look. Right. So we had Wednesday's fib retraced. Right. We had that retraced. When today opened above yesterday. It opened above, right? This is pre-market. This is 4 a.m. today, right? Thursday, January 16th. Price opened here, right? Now, what we were saying was if price opens or close or if price opens above its previous candlestick or below its previous candlestick and then it retraces 50% of the candlestick, then it is more than likely that price will also close below or above the previous candlestick within a good amount of time, right? So we had a lot of time for that move to happen. So early in the day, I think I might have said it about 9:30, 9:35. I said let's look for a break and retest of 236, which is the 0.5, the 50% of yesterday's candlestick. So if you go back to the 24-hour, right? Let me remove this again. I don't understand why I'm getting this like that, but it's all good. Right? Let me go again to the 15-minute. Oh my Lord. Oh my Lord. Move. Alright, let's start here. You'll see that price, right? When the market opened here. When the market opened, price came down and reacted exactly or 50% of yesterday's candlestick. This is all yesterday. All of this yellow and this white is yesterday. Price reacted to 50% of yesterday's price action, right? So when we called it out, we said if price could break under 50%, it's more than likely it's going to go all the way outside. It's going to close outside because it opened outside. It's going to close outside, right? And that's exactly what happened. So if we hit the replay, let me hit one time, right? Now if we hit the replay, you'll see the action in real time, right? Market open, boom, and that's that. And we had a continuous spill, but that's because we broke 50% and we had a good amount of time to do it, right? So the 50% retracement is a good strategy, especially for beginner traders where, you could kind of predict a move, right? I'll show you another one. This is one right here. We have this candlestick here, right? Price opened below its previous, right? So whatever day this was, whatever day is it? What day is this? Friday, December 6th, right? Price the next day, Monday, opened. Where's the replay? Here we go. Price opened below damn, my fault, y'all. Let me wrap this up actually. Let me go back to the 24-hour, right? I just leave it like that. Price open below the previous Friday, that Friday. So on Monday, price opened down here, right? We have this Fibonacci marked up because we see in real time price will open, it came down, and then it started to retrace. That's when we backed the Fibonacci out and we hit the previous day because we see that price is trying to retrace. Once price beats 50%, 0.5, once it beats 0.5, we can almost bet that it's going to go outside of yesterday, right? So it opened here, it came down a little bit, then it started to retrace. And let's break that down to the 15-minute time frame, right? Price. This is Friday. This is that Friday. The low, the high Friday. Price opened, came down a little bit, came up, retraced 50%. Notice how price reacted perfectly to the 50%. Came down a little bit more, broke free of the 50%. Now we could almost guarantee, and especially when it happens this early, we can guarantee because we have time that it's going to go outside, and that's exactly what it did, right? So this is a good beginning strategy. I hope I didn't drag it. I know I kind of dragged it, but I hope I didn't. Even this one is a outside. This is outside, right? But anyway, yeah, that's basically it. So study, just look at different assets. All of this action happens on every asset. It happens all the time, all day, right? Every asset has its own patterns, and they're all the same. All the price action is the same, rather. Remove. Right? We have one right here, and it happens on all time frames. Right? This is a 15-minute outside candle right here. We have this candle. We have this red candle here. The next 15 minutes, price opened. Right? It came down, but then it started to come back up and retrace. We back our fib out. High to low. If it beats 50%, we can almost guarantee it's going to go outside. It's going to go the full way and some, right? And that's exactly what it did. Happens all the time. All right? So, yeah, that's the 50% fib strategy. I hope y'all get that, master that.